In this episode, we're going to talk about the 10 frequently most asked questions about infinite banking. This is going to be part 2, so questions 11 through 20, all your infinite banking questions answered. Hi, everybody. Welcome to Control and Compound with Darren Mitchell. I'm your host, and joining me today is Christina Wyatt, wealth coach at Control and Compound Financial. Hey, Christina.
Hi, Darren. How are you doing today?
I'm doing wonderful.
That's great. Before we get started, I just want to remind our listeners that if you're listening on your favorite podcast platform, don't forget to subscribe to the podcast and give us that 5-star rating. And if you're watching on YouTube, hit that like button, subscribe to the podcast, and hit the bell button so you always know when new content is coming out.
Love it. Okay, Christina, we did part 1. This is going to be part 2 of questions answered or most frequently asked questions about infinite banking. So let's just dig right into it. The first one I have on my list today is, people, they read the books, they listen to the podcast, they do their research, they hear about it, they get referred. And their question often is, how come everyone isn't doing this?
Yeah, that is a very popular question. One we get asked almost daily. Why isn't everyone doing this? Well, billions of dollars is deposited into whole life policies every single year. So there are a lot of people that are doing this. There are a ton of people that are doing this. So you might not have heard of it, but there are definitely wealthy individuals out there that are contributing to these policies.
Yeah, and I mean, everyday Canadians, wealthy individuals, real estate investors, business owners, literally billions of dollars, hundreds of billions of dollars inside these funds. Banks are doing it, again, individuals all across the country. You don't hear about it as much because the banks can't sell it, the mutual fund companies can't sell it. So, their interest is in controlling your money. This is you being in control of your own money. So the big financial institutions don't promote it. But the reality is billions of dollars go into it. And once you become part of a community like ours where like-minded people are doing this, you realize, wow, there's all kinds of people everywhere doing it. And the trend has just been amazing, the growth in this in the last couple of years, because in times of uncertainty, people want certainty. Okay, what's next, Christina?
All right, the next one that I have is, how many infinite banking policies can I own?
1 billion. No. So there's really no limit on the amount of policies you can own. I own 8 myself. So what the insurance company looks at, they're going to look at the death benefit and say, can we justify the death benefit based upon your income, based upon your assets, based upon your holdings, etc. So there's no limit if we can justify it to the insurance company. And typically, we've people with 2, 3, 4, 5, 6 policies, that's not going to be a problem. If you start talking larger premiums on all these cases, then sometimes we got to do a business case. But really, that's never an issue. I can't remember the last time it came up where we didn't allow someone to buy a new policy. And many of our clients come back after 1 and 2 years and buy a second, third, fourth, etc. So there's really no limit on the policies as long as we can justify it with the insurance company.
Yeah, exactly. There's no limit on policies. They limit you on death benefit as an individual. And we always try to have the lowest death benefit, so we have the highest cash value. So it does take a while to get up to that maximum death benefit. And then another thing to note is, it's per insured as well with that death benefit amount. So if you're purchasing or you're putting a policy on your spouse or your kids, that's how you can, they don't look at that as a whole either. You can have those set up for individuals as well.
Yeah, great point. Okay, the next question, Christina. How do I take a loan on my infinite banking policy? What are the steps?
Good question. We have lots of questions on loans and how they work. Great first question. So policy loans are super simple. You literally request them. So they have the insurance companies have a form. Our office helps facilitate everything that you're doing with these policies if you're working with us. If not, it's also very simple. You fill out a form, you submit it to the insurance company with your void check, and they are going to deposit those funds in your bank account, usually between 5 and 10 business days or sooner. So super simple. You make the request. Even for some of the smaller loans as well, you can call the insurance company directly and request them, and they will deposit those funds into your bank account. So there are no questions asked. It's literally your name, policy number, signature, and amount you'd like on that form, and they're going to deposit it into your bank.
Yeah, I think the last one I did, it was literally I had my phone and I just clicked, DocuSign, start, sign, done, and that's it. And they have your banking information on file too. So
Yeah, you would only send it if you had a different place you wanted it to go, or if we didn't already have it on file. But that's all they need. Where they're going to send it, and your signature saying you want it, are the two things you need for that policy loan. So pretty darn simple. Another question, a very frequently asked question that comes with policy loans: are policy loans taxable, Darren?
yeah, so I don't remember ever a client paying tax in the last bunch of years on a loan. So there's two types of loans. We have a policy loan, and that's typically what we're going to use in the first 10 or 15 years. And that policy loan in the first 10 years typically is not taxable. Once you get into big loans where you're borrowing more than your adjusted cost base, basically what you deposited less some things. So basically, once you start getting into the larger loans where you're borrowing more money than you deposited or more than your ACB, then a portion of it would be taxable. But the fix for that is we also have bank loans. So there's banks lining up to loan on this cash value life insurance because it's such a stable, rock solid investment that they love loaning money on that. And the bank loans are never taxable. So in retirement, we're typically using a bank loan, slightly lower interest rate. That's going to be tax free. In the early years, we're going to use the policy loan, and that's going to be tax free in the early years. So, a couple things that just make sure you're dealing with someone that knows how these loans work and knows how to structure them, so you don't pay tax. So, it's a non-issue for our clients. But technically, if you just do the policy loan, you could face in the later years a little bit of tax, but there's easy steps to avoid that. All right, what's next, Christina? What are the interest rates and are they fixed?
Very popular question as well. So interest rates on these loans. Right now, we are looking at a 6.7% policy loan interest rate, a little bit lower with one of the carriers, but around that mark. Are they fixed? Okay, so interest rates are not contractual, so it's not written in the contract what these interest rates are going to be, but they don't necessarily have to change with prime either. So it's at the discretion of the insurance company. We went a long time at a set rate. It was like 10 years plus without it changing until we've had these most recent interest rate hikes that we've seen, and now we've started seeing the insurance companies adjust those interest rates to move with the rising interest rates. So contractual, no, they can change. Do they have to change with every increase? No, not necessarily either. So up to the discretion of the insurance company.
Yeah, and historically, again, we got a 100+ year track record. The interest rates, historically are going to be below the dividend rates. Other than in a rising environment, you might get a little blip like's going on right now. So if interest rates stay up, the dividend rate's going to increase typically above the loan amount, or interest rates come down and the loan amount's below the dividend. But other than a little blip in a rising market, historically, the loan rate's always been lower than the dividend. But again, not contractual. There's a lot of things that are contractual, and there's some things that aren't, and we want to be clear that this is not contractual. It's contractual to loan you 90%, but it's not contractual on the interest rate.
Thanks for listening so far. If you're watching on YouTube, make sure you like, subscribe, and hit that bell button so you always know when new content is coming out. If you're listening on your favorite podcast platform, please leave a 5-star rating and leave a review and subscribe. And if you are interested in learning more, please visit our website at controlandcompound.com to sign up for a free education session with one of our wealth coaches.
Exactly. One thing to note as well that we like to encourage is when using these loans for investment purposes, the interest is going to be tax deductible, right? So you can really cut that interest rate down when you're using it for investment purposes, real estate, and all of those great things. So when using it as an and asset, you can get that interest rate down, which is nice. So just one more thing to note. Another big question on loans. Do loans affect growth in the cash value, growth of the cash value?
Absolutely not. And again, depend what you might see out there. If you take more loans, it's not going to make your policy higher in cash value. You can't borrow money to become wealthy. We can multiply money, take advantage of opportunities to be wealthy, but the loan has zero effect on the growth of the policy. So if you have an infinite banking policy with $100,000 cash in it and you don't take a loan, or you have $100,000 cash value and you take a $90,000 loan, is the maximum loan. In both those scenarios, you still have $100,000 in the policy. It's still compounding the exact same way, whether you have a loan or not. So loans have no effect on the growth of the cash value. Make sense?
Perfect sense.
All right. Can I use the policy to pay off my mortgage?
So this is a good question. Yes, you can use policy loans for whatever you want to use policy loans for, right? They're not asking you what you're using these things for, so you can use it for whatever you want, including paying off your mortgage. But when you sit down and look at it, is paying off the mortgage the best strategy or use for the funds inside of the policy, right? We like to multiply our returns by earning returns on the inside of the policy. So what we're earning on our cash value, and then taking those policy loans to earn those returns on the outside of our policy. When you're looking at a mortgage, what type of return are you making off paying off that mortgage? So typically interest rates are the lowest on your mortgage. They're lower than what you're going to be paying on a policy loan. So does that make sense? Also, paying off your mortgage is not an investment. So the interest is not going to be tax deductible. So you're going to be paying those full interest rates. To me, it doesn't make sense. I wouldn't use it as a strategy because I'm not going to make a higher return. Like, I like looking for those 15 to 20% returns on the outside and then keeping my 5% on the inside. The mortgage, tying up my funds available for opportunities by paying off my mortgage doesn't seem like a good idea because, I want those funds available for when those opportunities of a lifetime show up. I want to have access to my cash. If I have it tied up paying off my mortgage, that's not going to really work for me.
Yeah, I'm a complete agreement there. I do not believe you should use an infinite banking policy to pay off your mortgage unless there's some rare exception. And the reason for that, it's in our name, control. I want to be in control of my money. I want to take money and invest in opportunities. And if I took all the money or all the cash value of my life insurance policy and I borrowed it to the maximum amount to pay off my mortgage, well, now I'm not in control. What happens if I lose my job, want to buy a business, real estate drops, and I want to take advantage of an opportunity? Now I'm beholden to the bank. So I would much rather not give up control of my money. It's kind of like paying cash for a rental property. Technically, you could do it, but it doesn't make sense because you're giving up control and you're limiting the amount of opportunities you can take advantage of. So, unless there's some crazy exception, which may or may not happen, not a good call to use a policy loan to pay off your mortgage. What's next, Christina?
Does it make sense to use funds from an RRSP to make your deposits?
Yeah, that's a tricky one. So 100%, we don't encourage people to cash out their RSPs and fire it all in a infinite banking policy. Do we get people ask us that question all the time? Sure. It's like, oh, can I roll my RSPs into this infinite banking policy? And the answer is no. In order to get your RSP money into an infinite banking policy, you would have to cash that money out, pay a boatload of tax, and what you're left with, you could put in the infinite banking policy. And for almost all cases, we don't really encourage that. There's a couple exceptions. Now, when we talk about contributing to RSPs, lots of people, when they learn about this concept, like for me, I stopped contributing to my RSPs. I didn't cash out what I have. I maintain that. We do have some clients, though, that will say, okay, if I can manage my income, RSPs only make sense if you can take it out in a lower tax bracket. And if you're a business owner, real estate investor, you're probably not going to be in a lower tax bracket. But if you're able to manage your income now, we have had some clients say, okay, I'm going to stop taking an income from my business because I can manage that. And then I'm going to start taking out my RSPs, now, and I'm not going to be in that massive tax bracket because I'm no longer taking a business from the income. So if you can manage your income, we can have that discussion. But as a general rule, no, we don't say cash it out and put it all into there. If you can take it out, the RSPs out while you're in a lower tax bracket to put in a portion, again, that goes back to if you're going to be in a lower tax bracket by managing your income. But that's really, you got to talk to a wealth coach before you make a decision on that. But we have those conversations every day.
Yeah, exactly. For some people, it might work. You know, I met with a client the other day, and the wife was on maternity leave. So she was like, this is probably the lowest tax bracket I'm ever going to be in my life. And I was like, well, it might make sense to take out the RSPs to fund the policy for you in your exact situation, right? So if you look at it at a case-by-case situation, sometimes it does make sense, but you just need to definitely take into account that you're going to be paying those taxes. It is not a rollover to move it into the whole life policy.
So we're not saying you should cash out your RSPs. We're not saying that at all. We're saying in the rare exception we can have that discussion, but I want to be clear, we're not telling people to take their $1 million in RSPs and cash it all out tomorrow and put it in a infinite banking policy. If that's what you want to do, let's have a conversation and see if you're unique, but as a general rule, no. Okay, Christine, we on to one more I got for you. Can I set it up inside my corporation? Can I set up an infinite banking policy inside my corporation?
Yes, and business owners do this every day. This is a great strategy, having it in our corporations for a number of tax reasons. So there's a lot of tax benefits to setting these up inside of your corporation for you. We set up the corporation as the owner, and then the corporation also has to be the beneficiary. That is very important. So when setting these up, you have to do it properly to stay on side with CRA. And then you have your insured. So the corporation owns it, corporation's beneficiary, and then the insured could be you if you're the shareholder, or another shareholder in the business. We're able to use them as the insured body and set up these policies to be corporately owned. And there are lots of benefits to doing it, to having it set up to be corporately owned.
Yeah, I personally have personal policies as well as corporate policies, and if you have money inside your corporation, it is a phenomenal strategy to put a portion of this in the infinite banking policy. We could have a whole podcast. We will have a whole podcast on the business stuff. But I mean, the idea that you can, that first $500,000 a business owner earns, they're going to pay, 10, 11, 12% tax depending upon the province. They're left with those 88 cent dollars or 90 cent dollars. Those are incredibly tax efficient ways to invest in this policy. But again, it doesn't always make sense, case by case basis, and talk to a wealth coach. But 100%, we do corporate policies every day. I own them. I love them. They're fantastic. What else we got, Christina?
All right, last question. Can I use an infinite banking policy as an asset class?
Great question. Absolutely. So I want to be clear. We're not saying this is going to be your best investment and this is where you should put investment. We're saying this is a savings vehicle. This is a savings vehicle with incredible benefits, right? It's like a savings account or a TFSA on steroids. So it's all kinds of great things for that. But the reality is we have some clients that look and say, okay, I've got $1 million investment portfolio. I've got $200,000 or $300,000 in fixed income. I'm earning 0, 1, 2, 3% on that on a fully taxable basis. Even if I don't borrow this money, does it still make sense to do the policy? And, oftentimes the answer is yes, for sure, because now we're going to take that fixed income that you pay the high tax on. We're going to take a portion of that, put it in a cash value life insurance policy. It's going to grow tax-free. You can access it tax-free. It'll come with a death benefit and all those other things we talk about. So absolutely, we're going to do a whole podcast on this as whole life as an asset class. Works really well for business owners, real estate investors, and wealthy individuals to say, let's park a portion of my money here. And what's the end result going to be down the road for me in retirement and my family after I pass away versus of not doing it? So it is, but I just don't want to confuse it with a pure investment. It's not going to be your greatest return. Can it be greater than your fixed income return? 100%. Come with bells and whistles? 100%. But keep in mind, this is primarily a savings vehicle that we're going to multiply money for opportunities. Okay, Christine, I think that's it for today. So we've got the part 2 of Top 10 Asked Questions. Thanks for watching. Thanks for listening. Have a great day. Thanks for listening to this podcast. If you're listening on YouTube, please like, subscribe, and hit that bell button. If you're listening on your favorite podcast platform, please leave us a 5-star review and subscribe. And if you want more information, check out our website, controllandcompound.com, and you can sign up for an education session with one of our wealth coaches.